Was my biggest loss in a day. It was about $25,000 to $30,000 on pound dollar. Trading's very much the furthest thing from easy money. It's the hardest way to make easy money, right? So my general win rate over the last 100 trades is in about the 70% zone. I'd rather have a stop loss that's too wide than a stop loss that's too tight. I don't understand this whole facade of full-time trading.
Hi everybody, welcome to the Trading Battle. This is Boris Schlossberg, and today I have a very, very special guest with us. Probably many of you know him from Twitter because he's very, very active on X. Mr. James Bruce. He's, I think, sort of the quintessence of a hard-working retail trader, a guy who's just really pulled himself by the bootstraps and has become a very, very clear and interesting and dominant voice in retail trading. He's got a lot of things to share today with us, including his whole journey of trading, as well as what he's doing now, and generally just share our ideas about the market. So welcome to the show, James. Welcome to the Trading Battle.
Yeah, thanks, Boris. Always great to be on the Trading Battle. I always appreciate the guys' time and being on here is always cool to have a nice conversation about trading.
Yes, our favorite topic, for all the degenerates in the world, including myself. You have a sort of a unique story because trading wasn't something that you were born to do. You weren't 12 years old saving your money to go invest into the stock market. You probably didn't even know what the markets were until you were, in the adult age. Take us back a little bit about sort of, your general early youth, what you were doing, and then how you found yourself in the financial markets after all this time.
Yeah, I always knew what the stock market and that obviously was, but it's not like I was interested in investing or trading trading it at any point. But yeah, I kind of grew up in a town in South Africa, as you can see from the picture behind me. I'm South African, but grew up in a town in South Africa called East London. It's on the coast, east coast of South Africa. And then when I was 18, I signed a professional rugby contract to join the Sharks in Durban, South Africa, which is just a little bit more north, about a 9-hour drive. And I moved up this way to pursue rugby as a career. Which obviously lasted for 3 years. And then I played a couple of games with guys that are actually playing for South Africa at the moment. So I played 2 senior matches for the Sharks at their first team. And then I bust my knee up. And during that time, it was 2018 now. I think at that age, I would have been about 19, 20. I'm 26 now. Doesn't look like it with my hair. But yeah, I'm 26 now. And at that time, I was about 19. And one of my friends who I played rugby with was trading. So I said, okay, well, this is quite interesting because obviously from Instagram and online type of stuff, trading, I don't really personally like to tell people what I do because it can be distorted. I think the image of trading and, these fast cars and easy money and, trading's very much the furthest thing from easy money. It's the hardest way to make easy money, right? So it kind of put me off, but I was like, well, it must be true because, my dad's a chartered accountant by profession and runs his own practice. So I knew that he obviously invests in markets and so forth. But I was like, let me just give this a go. And obviously started with CFD trading currencies, mainly your pound dollar, all that type of stuff. Got my ass handed to me for 2 years before I even started to see any form of progress. And by that stage, I would have been, just finishing up my BCom degree, Bachelor of Commerce. COVID kind of wasn't a thing yet, but I started to see some success. I found Austin Silva, who I attribute a lot of my success to. He's been a great person, mentor, and guidance in my life. So I always be thankful and appreciative of him. And from there, things kind of started to change. I started to find, actual, entries and exits that are actually defined and clear, not just, kind of like a coin flip. And then from there, kind of things started to take off. I had my first 6-figure year in 2020. And then, I thought I'm going to be driving those fast cars and that by the next year. But there's been a lot of ups and downs and, trading has its own journey in itself. And now I've actually just become a dad recently, last month, actually. So things have been a lot more busy in my personal life. But just taking it one day at a time and enjoying the journey. I'm just, very grateful for, the guys that I have in my life, like Austin, and it's just, it's trading such a journey of yourself. And it's been a great, so what's it now, 7 years now that I've been in the markets actively.
So what was it in that first $100,000 run that worked for you? What were you doing at that time?
That's a very good question, because sometimes as a trader you have periods of like you can't even miss. Like you're trading and it's like, geez, you everything you touch turns to gold. And then other times it's like very markets are working against your strategy in the way that you trade. I think during that time it was 2020. I started at the beginning of 2020, and I actually had people that had invested into me because I had like a 6-month track record that was family that were like, okay, well, we'll give you a couple $1,000 to see what you made of, right? And it kind of, spiraled like that. It was like, okay, well, the guy can actually trade. And then, they gave me more and so forth. But I think what kind of worked for me was, and I don't know, at that time, it's kind of like also naivety, when like you're just young, you're not really scared of anything. I mean, at that time I would have been 22, and I think, kind of like when you're not really scared of anything and you just go for it, markets were obviously my favor. I mean, some of the currency pairs were moving 300 pips on a day, on an average day. So, I mean, you catch a trend, you can, let it ride. And by the end of the day, you're up quite nicely. So during that time, I think markets were trending. I took advantage of it. And I had people that had invested and backed me as well. So I think that's kind of what happened during that time.
So you were trading continuity trades in size, basically.
Yeah, continuity trades in size. Opening at the start of the day, like London session, I'll trade like maybe pound yen or pound dollar, and then by the end of the day, I'd come and I'll check. Okay, cool. This had moved, 200 points, and then or pips, call it whatever you want, and then I'll be closing. So. And sometimes holding overnight as well, if things were still aligning for me too. So continuity trades in size and scaling up that way.
Were you trading any particular time frame at that point?
Mostly actually the 50-minute time frame, but like the 50-minute time frame, that kind of like, with trailing stops, like I'll trail my stops. Okay, like at the end of the day, okay, I'm in profit. Let me trail my stop to maybe half of what I am in profit, and then just let the rest run overnight. So 15-minute time frame, but having a broader aspect of like the daily and like the hourly and the 4-hour as well.
How in that time when there was a lot of volatility, what kind of stops were you using? Were you using 50 pip stops, 100 pip stops? What were you doing?
During that time, I was actually using ADR stop losses. So like maybe 50% of ADR. Because obviously ADR was adjusting so much on a day, on an average day. Like for example, 1 week, pound dollar could be moving on average, 50 points on an average day. The next week could be moving 250. So adjusting like that did help during those volatile times.
In pip terms, if you remember, was it, the stops were between like 50 and 100, depending on the ADR?
I would say actually between 30 and 50.
30 pips on pound dollar is 10 weeks, 10 minutes worth of work sometimes.
Yeah, exactly.
You started trading London session. You're in South Africa. What time is it for you during London?
Yeah, so South Africa, we have actually the best of both worlds. I mean, right now we're filming it. It's actually 8:15 in the evening, my time. But London session is 10 a.m. my time. And then when you guys change time zones and all that type of stuff, it will move to 9 a.m. South African time. So at the moment, London session is 10 a.m. South African time. New York is 4:30 p.m. South African time, the open. But then when you change it, it will be 9 a.m. South African time and 3:30 p.m. South African time, London and New York open.
That's pretty comfortable for you because you basically, it's just daytime and you open London and you can straddle New York to the evening and you're done. And
correct.
You really don't have, the only thing you really miss is the Asia session, which is the quietest one of all. And that's interesting. So did that story end well, or did we run into trouble after we had the first 100,000 year?
As always, we always run into trouble because now you think you're King Kong. So no, I had a good year in 2020, and then I thought, okay, at that point I was like, what are we going to do? I think I actually might have spoken with you actually about 3 years ago. You guys can actually maybe go and rewatch that on the Trading Battles YouTube. But also I had a trading battle, and we spoke about like what was my biggest loss in a day, and that was I think it was about $25,000 to $30,000 on pound dollar in an actual day. Beating the markets, trying until I'm right.
With that $25,000 loss, let's just deconstruct that because it's interesting. I always find it really interesting to see when it goes wrong and when it goes right. Was that a situation where you were coming into a trade, getting stopped out, coming in, getting stopped out, or were you coming into the trade, adding until eventually it blew up?
Adding until it blew up, until I eventually couldn't take. So our dollar cost averaged into it until I actually couldn't take the pain of it anymore and had to get out of the market. And by that time, your emotions all over the place.
Have you dollar cost averaged into any position after
not
that?
As bad as that. No, not as bad as that. So
That is the single most honest answer I've ever heard in a trading battle. Thank you for being honest. Almost everybody goes, oh no, I never dollar cost average again. Everybody always dollar cost average. No matter how long you trade, you can't get out of that bad habit. The only thing you can do is just reduce it to a tolerable size so that when you're eventually wrong, you don't blow up your whole account. That's about as good a behavioral mindset as you can get to. That's interesting. So this huge loss. And then obviously you covered it and you were like, Jesus, now I lost like, a quarter of my trading capital. What'd you do after that? Did you stop trading for a while?
Yeah. So I stopped trading for a while. I think, so as I said, like from when I took that loss, I was like, okay, I finished my Bachelor of Commerce degree. My rugby career, I was like, rugby doesn't make the same money as you guys in the States, like the NFL or the NBA or baseball. So I looked at it myself. I spoke to my dad. I looked at myself from an objective point of view. I was like, Dad, what can I do? Obviously, I've had a great year trading. Do I want to do this full time? And I was like, yeah, let me go for it. So obviously I had that loss quite early on, and that was quite a big stumbling block. All competitive people, because obviously I'm quite a competitive person. You got to, I don't know if Tiger Woods said this or whatever it was. As you can see, Tiger's behind me now. But when he had those tough times and tough years, he always said it's not what you achieve, it's what you overcome in order to achieve it, right? So I was like, no, like I'm going to use this as a learning lesson, because it either was going to happen now, or it's going to happen in 10 years' time when I've got 3 children, and then it's going to hit a lot harder because it might be, my trading account might be 5 times the amount. So, I kind of use it as just a stepping block to work forward. So I took some time off from trading and, got my mind right still. And I think everyone that is actually watching is someone that I really, really admire, because he also came out and spoke quite openly about he lost $500,000 in a day, and that was Tom Canfield. The stock trader from Twitter. He's actually not so much on Twitter anymore, but he's spoken about these in a few videos, and that really helped me get over it, because he spoke about his losses and how you just have to let things go. You just have to let things go and move forward. What's done is done. You can't change the past. Unfortunately, yes, it hurts, but you just got to move forward, and that really did help me a lot, and kind of found my groove. Again, I'd say 6 to 7 months later.
Did you do any new strategies? Did you review your approach, or were you trying to basically start doing the exact same entries and exits, but just obviously in a much more disciplined fashion?
I looked at it from an objective point of view. Whenever I'm trading quite poorly, it very rarely is it is it like going to be the strategy? It's always me dollar cost averaging like that, or just being an idiot at times. And you got to look at yourself from an objective point of view. It's never the strategy that's going to make a trader. It's always going to be the trade itself. That's the actual edge of a discretionary trading system. Yes, if you're trading algorithmic ways and that, you have to build alpha and that's all cool. But as a discretionary trader, I looked at myself objectively, and I looked myself in the mirror and said, I need to be better. Sometimes we all have to do that as human beings, and as traders, it's no different.
Yeah, absolutely. Were you still trading FX at that time, or did you start switching around to more indices, commodities? Like, did you start exposing yourself to new instruments?
Yes, just FX at that time. No indexes, no commodities, nothing like that. I did, when I first started trading, I did dabble in a little bit of gold, but I just moved so aggressively, so I kind of left that alone. So it's still just FX at that time. In that point in time, but obviously in the more recent years, I've moved. Yeah.
I was going to say, FX went through a massive volatility compression.
Correct.
And when there's no volatility, there's nothing to do. So what did you do? How did you find yourself?
This is why I think a lot of traders don't understand that this game is a long-term game. And one of the guys I really look up to in the space is trader Nick. Noah has been on the show a few times. Someone actually asked him, how long should it take to learn to day trade? And his answer was actually brilliant. I've actually saved it, because every single time that I get asked this, I literally just send them that exact same answer. I'll send them that screenshot to that person. And he gave a great answer. He's like, it's the equivalent of studying an engineering degree for 4 years. And then the work only kind of starts, because then you start, building up, then market cycles change, as you just said. So during that time, FX did go through a massive volatility compression where it wasn't moving. And that's where, because me being a youngster, I had to be like, okay, I have to learn from this. And that's where I learned a lot from guys like Anthony Crudelli, Pax, and the guys online on Twitter. That's why it's been so good to. I love social media for that aspect, that you actually can look up to these. Obviously, there's amazing traders, even like yourself, Boris, that like you can actually learn from and take the insights, because they're not talking out of their arse. They're talking from real life experience that that we all want to have. You can only teach a certain amount of things. The rest comes from actually experience and getting your head knocked in so many times before you actually realize you need to get better. So it went through a volatility compression, and I struggled again. So I came back, I made the money back, and then I struggled again. And it was, again, another tough time for me where you have to kind of just look at yourself and say, is it me? Is it the market? Is it my strategy? And I looked at the market objectively, and I was like, GU is moving 40 to 50 points on an average, pips on an average day. I need to find something else to trade. And that's where I started to look at the NASDAQ, the Dow Jones, and the S&P, and the DAX, and more of the indexes that actually do move. And I had to also put my ego aside at that stage and say, listen, James, I need to actually learn, different markets. And I think also I watched actually a video the other day of Anton Kriel, who he gets a lot of guys that come to learn from him and say, I want to be a retail trader, but I'm going to be a full-time forex trader. And it's like, dude, that's probably like the worst thing that you can do, because it's like, you need to have other markets. What happens if forex doesn't move for a whole 6 months? Well, I'm here to trade euro dollar. I'm trading euro dollar every day, but euro dollar is moving 25 points. You're not going to make money, no matter how good of a trader you are. So yeah,
you make a really good point, and I wonder if you would agree with me. So you were talking, I sort of started thinking about this. I think the bare bones minimum that you need for a day trading instrument is 100-point range per day. In other words, if you don't have a consistent 100-point range per day, and obviously, NAS is going to be 3 to 4, and Dow will be 4 to 5. So those are prime instruments. But, gold is 3 to 4. Also, it's $30, $40 a day, 400 points a day. Those are all, that's why those instruments are excellent day trading instruments. It's not the product itself, it's the volatility of the product that really, and I think that's kind of an interesting way of, if somebody were to come to me and say, I want to day trade, my first advice to them would be find an instrument that has at least 100-point range for a day before you even start looking at it. Would you agree?
I agree with that wholeheartedly now, particularly because I've been learned from my losses that you can't, if you're going to trade, for example, if you're going to trade Euro GBP that's got an average daily range, I can bring it up right now. Euro GBP has got an average daily range of, let's have a look at it, 34 points, a whopping 34 points, pips, right? You're probably not going to make money long-term doing it. Can you do it on a day-to-day basis long-term? No. Can you do it 1 or 2 times in a month? Yeah, probably, but it's not from a consistent. You're not going to come in and trade Euro GBP and make money by only trading that. So yeah, I agree with that.
Speaking of that, by the way, what is your typical day is like? What do you run us through? Like, what do you do from dawn to dusk?
During this time where I was, only trading full time, I'd had the big loss. I'd come back and it's finding my feet. I wasn't sharing anything online. I was just a trader, wasn't doing any content, nothing like that. And I actually realized to myself, like, my days were actually very boring. And that's why I don't understand this whole facade of full-time trading. For me, it actually probably was some of the most dark times of my life, because I would be making good money, but it's actually really a lonely time. And it's it's just you behind a screen, and it actually is very, very mentally tormenting, just to put it lightly, especially when you do have losing days and you can't really explain it to anyone else besides maybe your significant other. My wife, my girlfriend at the time, who's now my wife, has been amazing at that, always helping me bounce back or helping me keep my ego in check when I'm having a great month or whatever. Typical day for me would be, I wake up, I normally work, as I said, until about 12. So I don't wake up early. I wake up at about like 8 o'clock my time. I'm working till 12 midnight, sometimes past. Maybe making content, helping guys that we're coaching, Austin Silva and myself and another guy called Evan Dyer, who's actually in New Jersey. We work together. We have our mentorship program. So I'm looking at guys' daily report cards and that in the morning, seeing what the DAX is doing in the morning. I do enjoy trading the DAX. It's probably my most favorite ticket to actually trade at this point in time.
It's a great instrument for you this year.
Exactly. It's up like 13% this year. So a lot of my profits have come from the DAX.
Last year I traded the DAX. It was the most miserable experience of my life because everything, all the US indices were great and DAX was horrible. Now it's just money in the bank every day.
You can literally just sometimes wake up and buy, and it's not where. It moves very, very nice. I look at the DAX in the European session. That's kind of like my main ticker that I am enjoying at the moment, just in terms of the phase that we're in. DAX is, as mentioned, up like 13% this year. I'll check the daily report cards. I might make a video or two based on my previous day's trading. Did I have a good trading day? Did I have a poor trading day? I'll make like a 5 to 10 minute video on that. I'll post it to my YouTube channels, to the guys in our private mentorship group, walking them through what I did well, what I did poorly. And then kind of like I'm just spending time with the family at the moment in the mornings. I've got a son now. So just spending time with him and my wife and just chilling out, and then going to gym. And then come around about 1, 2 p.m. South African time, I'm getting on some calls with maybe some guys that we're coaching. Then, I do some work as well for Edgefill. I get on the pre-market prep. I run their live streaming service over there. And then we into the open. We're trading with the guys. We've got our live streaming service on ASFX TV with Austin, Evan, and the team there. And then after that, I'm doing more calls in the evening and then wrapping up and heading to bed.
How many trades a day do you do usually?
Yeah, well, when I'm trading good, less than 3. When I'm over trading, more. But typically about 2 to 3. That's like kind of my sweet spot. As mentioned, I've kind of changed my approach in the last month, which we can maybe speak a little bit more on as well. Is that I'm kind of more like taking one outright position for the day, and then if I take a position and in the next 2 hours I'm up 30, 40 points on the deck on the S&P or the or the DAX, I might pull that. I might take that for profits. But kind of moving to more like a swing type style, where maybe I hold for anywhere from a couple of hours to maybe a day to 2 days. I'm finding that's kind of like my sweet spot. I just don't have the mental capacity right now with everything in personal life to be watching the lower time frames.
When you were trading FX, sort of exclusively, how many trades were you doing that?
Again, also probably 2 to 3. As soon as you go over that limit, the FX market is not one that you want to be over trading on, because it can be quite choppy at times for sure.
I was just curious because it doesn't sound like you were ever really a super. I consider a super active trader somebody who does 20 trades a day.
Yeah.
You were never in that camp, right?
No, I've never really been in that camp. I've never really tried it. I mean, I might have had some days where I've taken maybe 10 trades in a day, and even by then I was super exhausted by the end of the day. But this just doesn't fit my trading style,
No, I understand. Yeah, coming from a guy who did 176 trades in 2 days.
Yeah.
But speaking of which, by the way, so, you do a lot of market calls, and we'll talk a little bit about your setups in a minute, but I'm just curious, do you follow macro? Do you follow news in general? Does it have any influence on your position trading? I'm just curious, what do you think about the markets? What do you think about the state of the market at this point? Whether you have any longer term leanings one way or the other? Love to hear it.
I can't say I'm the biggest macro guy. It's just not something I do well. Trader Nick does that very well. I think something that for me, what I've had to learn in my trading is you can never actually compare yourself to someone else. For example, you, Boris, you might make great money trading 170 trades in a day. It might not be for me. And just because you do that well does not mean I need to go and try and emulate that. And that's so for me, in terms of the macros, in the current state of the market, I mean, it is quite interesting. On the S&P, obviously, we're about 6-7% of all-time highs. We're sitting at the daily 200 EMA, so obviously an interesting spot to see where we are at the moment. But we have been coming down. The Mag 7 stocks are all below the 5-day, SMA. So we don't really look particularly bullish at the moment in terms of the broader technical outlook. Macro outlook, I don't really pay attention to that. Do I follow news? Yes, I will watch. CNBC. I'll keep my eyes up on Bloomberg and stuff like that. But, from a technical aspect, in my opinion, the only thing that really matters for me and the way I trade is the price in front of me and what the chart is doing, and I need to adapt to that.
So, but what about, do you stand away from the news or you're on a time frame where you'll absorb the news either way? It doesn't matter.
Obviously, you won't hold a trade or take new positions leading into a CPR print or an NFP print, of course. But maybe if I have a position that I've got in profit, or maybe it's sitting at break even, I might let it go into a CPR print but I won't take fresh positions leading into CPR. But most of the time I'm out of that news and then readjust from there, because last time CPR, on, I think it was Wednesday, about 3 weeks ago, it dropped literally 100 points and then literally rallied for the rest of the day, and then ended up getting some nice longs the following day. So I'm in the aspect of also like I'm just trying to do less. Like if I can take 2 good trades a day, 1 to 2 good trades a day, I'm going to make, I'm going to keep my over trading down and my dollar cost averaging at times. And then I'm probably going to have a good trading week. So I just got to be aware of, self-aware of that.
Well, speaking of that, maybe we could share a little bit some of the ways that you trade in terms of like, what does a 1 good 2 trades a day look like? Maybe you can run us through a couple of trades you guys did last couple of days. And talk also a little bit about the duration. I'm curious, what's the typical duration of your trade? Is it a 24 or 48 hours, 72 hours?
As I said, like it will depend from time to time. Like it might be 4 hours, it might be 3 hours, it might be 45 minutes. I think like I don't really like to classify as like a swing or intraday or whatever it is. I mean, if the market gives me a quick 50 points, I might be like, you know what? I'm actually going to close that. I'm not going to hold this into the close because just now Trump tweets something and then all of a sudden we gap up, after in Asian trading hours while I'm sleeping. And then I'm like, well, I've just thrown away 50 points, an easy 50 points on the table there for me. So yeah, we can definitely walk through a couple of trades. As mentioned, I do some work for Edgefill. So a lot of their stuff I love to use in terms of their reports. So basically what Edgefill does is it gives you like reports, and we can also show a couple of those reports, but basically shows you like, okay, if we take out previous days highs and lows, what are the probabilities that we will close as a bullish or bearish closing day? So it can help me with, alignment direction, because what I'm trying to do, I'm not macro scalping, like you, Boris. So like I do need to get the direction right in order to make money, because I think first and foremost, if you don't have the direction right, it's going to be very tough to make trades profitable from an intraday perspective into even a couple of days perspective, because you first of all, you got to get the direction right, and then it comes down to timing. But it doesn't matter about your timing if you can't get your direction right. You're not going to make money.
Very good point. Can we take a look at your charts? Maybe let's see if we can.
Sure.
What was the last? You said the DAX. Maybe we can take a look at the DAX because that's an instrument trade.
Yeah, I had some longs on the DAX here today. Okay, so this is my chart here on the DAX. It's actually turned off. I normally don't have the ADR tools up that I actually brought up like that, but something that I like to use. So I'll point you what I actually do have on my charts here. So basically on my charts here, I've got the previous day's high and previous day's low marked by these white dotted lines. I very much like using the previous day's high and previous day's low for direction plays and levels of interest, because I think that just how I see the markets is if we're trading above the previous day's high or low, known as obviously an outside day, it doesn't juice higher time frame traders into the markets, breakout traders or reversal traders or anything like that. That's my interpretation of it. I've actually learned that from a couple of guys' courses that I have taken personally. One of the guys being Stacey Burke, who I have a lot of admiration for, but he speaks a lot about this. What else I have on my time frame? I've got the daily open price. So, where we in relation to this daily open price? I've got the red 21 EMA on my charts. I've got the daily VWAP, which Austin loves VWAP. I know you know that, Boris, as well. And then I do have
I call Austin Mr. VWAP.
Mr. VWAP, exactly. Brian Shannon and him are like father and son. So, so I've got, and then I've got the weekly VWAP. So I've got quite a few things on my charts. We can just actually remove this. So that is what I have on my charts. This is what I like to use for my analysis, just to give me kind of a direction. As mentioned, there's no holy grail trading indicator or system or report that is going to make you $1 million tomorrow. It's just not going to happen. But I like to just look at things from an objective point of view. Okay, what is price telling me to do today? And then obviously just looking at the indicators and seeing what price is actually doing in relation to that. For example, today I actually had some nice longs. I had to stop at the lows, and I ended up getting out mostly actually as we took out the previous day's highs and chopped around. I ended up just pulling my trade, and we've obviously gone sideways since then.
What enticed you into that trade? Where did you enter that trade?
So I entered this trade exactly at 10:15 my time. This is the open bar, that bullish green bar.
Is that a 15-minute candle? Is that what I'm looking at?
This is a 15-minute candle. Yep, 15-minute candle.
Big bullish push on the DAX open, right?
Yep, off the open, above VWAP, above my 21 EMA, above my weekly VWAP.
All the buyers pour in. Then you go long. You put the stop underneath where the day's
low of day. Initial low of day. Yep.
That's the low of day. It has a big retrace, actually tests you quite a lot because it comes right back into the zone. Then they start buying it and they lift it into the zone. Yeah.
As you can see, I don't really have tight stop losses, bro. I mean, I could have probably gone with a stop loss there, but then we're sweating. 82-point stop on the DAX at this current point in time where the DAX is moving 500 points on an average day is not what I want to be. So I'd rather give it the extra space. I think that's also something that has really helped me in my trading, is that, I'd rather have a stop loss that's too wide than a stop loss that's too tight.
If you're going to be a positional trader, because you just want to let it, give it breathing room. We're going to talk about this, but I'm curious. Do you have a set of risk rewards that you do, or is every trade unique? You're kind of like, hey,
This is something that I've toiled with so often. So I don't have a set risk reward ratio. Like, it's not like I place a trade, I'm like, it needs to go 1 hour and it needs to go this amount of time, because one day, I did it. I've tried it, and the market will literally turn around at like 0.8 R, and then it will hit your stop loss, and you're like, I was up 0.8 R. Why didn't I just take some profits? So I don't do that. I'm more from like, I'll take a trade. If I'm taking a trade on the 15-minute time frame, I'll take it based on 15-minute candle closes. Okay, I'm on the 15-minute time frame. After the first 50 minutes, okay, cool. We had the first bullish on this trade. The first bullish bar was in my favor. It retraces on me, but it doesn't break VWAP. Okay, I'm going to stay in this trade. It holds it, buyers come in, and then we start to take off. And then, we were up about like 0.9 R, and I started to take some profits. I think particularly as a discretionary trader, I can't be super like rigid in that. I have to say, okay, what I have to read it for what it is doing. Maybe, in the next maybe year, I might be trading off like a 30-minute time frame or hourly time frame where things are more slow, and I can look at it every hour or so, or maybe at the end of each day. But for now, that's what's working for me.
Do you do an audit of your trades? Like, over the last 100 trades, do you know what your win ratio is? And
yes,
the general risk rewards are. What are your stats usually for that?
Yeah, so my general win rate over the last 100 trades is in about the 70% zone. So I have a high strike rate. My risk reward ratio is, and I might get roasted for this, but it's if you plug it into an equity simulator, it makes sense. My risk reward ratio is at about 0.7 R. It's not even 1-to-1. That's just something that it works for me. But definitely needs some improvement. I would say that, I track my trades on TradeZella, and it is something that for me it has always been a work on for me. I need to get that risk reward ratio about closer to 1-to-1. For those that don't know, and if you put it into an equity simulator, you will make money long term with those stats. But I would like to get to a point where maybe my win rate is about like 60%, and my risk reward ratio is about 1-to-1. That's a positive expectancy value system there.
Right, it is. Although that creates a lot more losing days. And that actually brings me to an interesting question. You said you've become a father recently. That obviously puts a lot more obligations on you. Does your wife work? Does she have a source of income? Like, it's fair. I think it's very, very hard to trade for a living when you have a family and it's your only source of income. I think almost nobody does that. Everybody tries to diversify a little bit of their income away.
Yeah. So my wife, she's a lot smarter than me. I will say that. So I hope she's listening to this. But no, my wife is, she's got her honors degree in psychology. So she's my trading psychologist at times. But no, she's got her honors degree in psychology, and she doesn't work at this current point in time. She hasn't worked for about a year and a bit. She was working with special needs children. At some days I might have been a top student. But no, she doesn't work at this point in time. She looks after our son. And agreed, I never recommend anyone to go into trading full-time. I've got other sources of making money, content-wise, all this type of stuff. And I always encourage other traders to do so, because I think to have trading as an only source of income, let's look at example for guys like Brian Shannon. Okay, look, he's making content. Okay, so he's a great trader in his own right. Look at guys like Anthony Crudelli. Look at guys like Pax. They could be sitting on their yachts and not actually being on social media at all, but they're actually trying to help the young traders like myself, come up. So they have other ways of making money. And I looked at it from a perspective of like, maybe I was young and naive when I was, in my early 20s. But no, I don't think trading full time should be, or definitely trading should not be your only source of income. In a year, you could have a period of like 3 to 4 months where you just hit loss after loss after loss. And you actually like, geez, when am I going to turn the corner? And then all of a sudden, you have a great 6-month period where you make all your losses back and 5 times the amount. But if you don't have another way of making money, you can't keep your head afloat.
Right. It's the variance. It has the greatest variance of any business in the world. It's like having a salary one day and then paying money out, and then paying taxes for the next five days, and then having a salary and then paying taxes. I think I've never thought of it this way, but it's actually the way you want to think about it. It's paying taxes today to the market. Nobody likes to pay taxes. Imagine you have to do it every single day. So yeah, I think it's the variance aspect of it that makes it very, very difficult. And speaking of the variance aspect of it, how have you been able to deal, or two things? Has your variance lowered since you've gotten better? Meaning that your highs aren't as high, but your lows are much lower. Like, has your drawdown gone from like, say, max 50% to maybe max 20%? Has that been a case with you?
Definitely has been. I've actually, I wouldn't say I'm actually trading as big as I was even, a year ago. I'm always trying to lower the variance. For example, let's just hypothetically say I've got $100,000 to trade in. I won't put $100,000 into a brokerage account. I'll put 10 grand into a brokerage account and trade that more aggressively, because now I know the max I can actually lose is $10,000, right? So, because you can, I've learned this from other traders, older traders that have helped me. But whatever you put into a brokerage account, you can actually lose. If you start dollar cost averaging, like I've had from personal experience, all of a sudden, boom, you're down 50% and you've lost $50,000, and that can happen.
That's what's known as using your brokerage account as a margin call. It's a very, very, very popular strategy.
I've gone to that aspect of it, and my variance. So I actually read a book from Jared Tendler, The Mental Game of Trading by Jared Tendler. And in 2022, I made 100% on my total allocation of trading capital. I had a great year. But I had 22 trading days that I lost 4% or more of my trading account. Meaning that I had some pretty shit trading days.
So you had 22 days where you lost 4% of the account or more. Did you ever have any two consecutive where it was like basically -8, -12 even?
Yep,
like
definitely did. I think the most I had was actually was 3 in a row. So, which is obviously very mentally draining. So I read the book at the end of 2022, and I came into 2023, and I said, my whole goal for this year, I don't care. And at this stage in my life, I was starting to find other ways of making money, like the content that could keep me afloat, because I know that I'm a good trader in my own right, and I can make money, whether that classifies as a good trade or not. I can make money when I'm trading well, right? But it was just my poor trading times that I needed to, downsize. And basically, I came into 2023 saying, I don't care if I make money this year or if I lose money. My only goal is that I'll have less than 22 trading days that I lose more than 4%. And that was my only goal. And in 2023, I had 5. So I dramatically, and in that year, I made 33%, in the trading year. So not a bad year. I mean, pretty solid year, but in retrospect. So my goal right now is to limit the downside. I can't be, because not only does it hurt your financial gain, to be honest, I will say this, is that I actually don't care about the money, because once you've been in this game long enough, and I'm still fairly new, the money comes and goes. Money comes and goes. It should never be the be all and end all. Of course, we had to make money, but should not make it to idle. So money's going to come and go. It's the mental tormentation that actually hurts the worst. It's your mental that hurts the worst, because now you're struggling to sleep at night. You're like, how can I be so stupid? So yes, definitely the variance has lowered in that aspect. I would also say that I'm not a big swing. I don't come into every single day and looking to trade, 20 contracts. I'm not looking to do that anymore, because it's not what I want to do. Will I build up to that? Maybe, yes, but I just want to find, I'm kind of in a sweet spot right now where I'm okay with the money that I'm making. And do I want to grow? Of course, every competitive person wants to, but I think you just got to find that like middle ground,
So speaking of that, actually sizing the actual techniques of your entries, are you a single entry trader, or are you a partial entry and maybe I'll keep some in reserve and come in on on a kind of a retrace if it still looks good to me, and then you definitely, I would say, it sounds like a partial exit trader. You'll take some off at 1 hour. You definitely will take some off, but maybe even at 0.7 hour you'll take some off and then move stuff to treble. So what is on the entry side? What is your technique?
Yeah, on the entry, this is funny. I used to be a multiple entry guy, but then as you might know, what does that could lead to? Dollar cost averaging, right? And that's one of the aspects that I saw my trading in 2022. that was just actually sometimes embarrassing to put quite bluntly. That, I would take an entry, it would come against me, our dollar cost average, and then by the time you realize you're like 4 or 5 entries deep, and you're like, geez, this is way past what I should have originally risked, and then you're getting out of it. And so to combat that, I'm a single entry trader at the moment. It's just, I would rather, there's a saying that goes that, if you don't put your chips in, you can't win. But if you put all your chips in, and you have none left, well, you can't make anything.
You can't play. You put all your chips in, you can't play.
Exactly. Yeah. So I'm a single entry trader. It just combats my poor habits of dollar cost averaging, and that's just what's working for me.
That's very good. Yeah. Now, you said you read you read The Mental Game of Trading. I'm wondering, what books have you read in trading that have had a great impact on you, or that you would recommend to people to read, either for fun or for education?
Definitely The Mental Game of Trading has got to be my favorite trading book. The reason I say that is because it actually gives practical examples of how to better your C game. Jared Cook talks about it, saying your C game in trading, your weak points, how to combat that from a practical aspect. Another book that I would recommend to traders is Mastering the Mental Game of Trading. Very similar names, but this is from Stephen Goldstein, who I'm sure you might know from Twitter as well. Someone that I really have a lot of admiration and respect for in terms of what he puts out. A very good trading coach as well. And obviously traded for himself for like 25 years before becoming a full-time trading coach. So his book is very, very, also very, very good, and talks. I think a lot of the times we sit here as traders and we actually, we don't understand that this is a very mentally taxing game. If you don't take time off, and if you don't have ways to actually, when you draw down or you're having the variance, to actually deal with that, it can be very mentally tormenting. And those two books have really helped me. Another book maybe that I could recommend, and from another great trader that I respect, is Tom Hogarth's The Best Loser Wins. That's another really good book to read. I don't want to give the staple. Everyone's going to say The Trading in the Zone by Mark Douglas. So, Mark Douglas is always
talking about it in my room today.
Yeah. That's a great book, a great guy that I love listening to, but I don't always like to be too mainstream.
But it is a really good book, and it really is a classic. It's worth reading. That's really, really interesting. Now, is there anything? There are a lot of people who are starting trading, and obviously a lot of people who do trading as an avocation. What are some of the things that you would tell new people or people who are considering coming to the market as about this whole endeavor?
Yeah, I would say the first thing, if that someone's coming in, is, do you really have passion for financial markets? Because if you don't, you won't last more than 2 years in this game. It can be very frustrating. So do you really have passion? Are you okay with losing money? Are you okay with losing money? Because if you're a very emotional person, which I can still be emotional, because I demand to be the best version of myself. So do you have, do you show other aspects in life that you show discipline? Do you go to gym every single day? Do you, are you a patient person? Do you show any other disciplines in your life that actually show, those type of aspects, discipline and commitment, and, committing to getting better every single day? Because if you don't, you got to ask yourself, well, is this really for me? Because it's probably not going to be one, trading wise. The second thing I would say is, however much you think you're going to make in the first 5 years, just forget about that and take it, and don't even, if you can break even in your first 2 years of trading, you've done really well. That's another one. I would say, find people in the space that you resonate with and learn from them. Everyone has this, bad stereotypical thing about like, oh, I don't need a mentor and they're scamming me and everything. There's some really good mentors in the space. I still spend money every single year on courses simply because I know that there's people that are better than me that I want to learn from. So get yourself a mentor. You can learn it yourself. It's just going to take double the amount of time. So that's another one. And, another thing I would say is keep it simple. A lot of times, you're going to see traders, they think they got the holy grail trading system, or they know the algorithm to the market. No one does. No one ever will. So you just got to take it each day at a time, come up with a simple trading strategy that makes sense for you and how you want to live your life, and look at improving it using your statistics.
Interesting. Great. Well, with that, I think that's got to be the final word, because that's really some of the best advice I've heard in a very long time from clearly someone who has done it for real, which is really great. You are a true gentleman and a real trader, Mr. James Bruce. We want to thank you so much for coming to hang out with us at the Trading Battle. As always, everybody, please be sure to follow us and make sure to tell all your friends about Trading Battle so we can bring you more really, really great trading content as the year goes by. I wish everybody across the world great health and great luck in the markets. Boris Schlossberg for the Trading Battle. Over and out.